So first of all, thank you so much, Alejandro, for organizing this and all the other, very accomplished speakers here. This is my first time on a Zoom with people in Latin America. So far, the only thing I knew, I guess, I don't know Spanish at all. Only thing I can say I know is uns, dos, tres, I guess. That's about it. So pardon my, if I'm not able to communicate well, but I do want to congratulate Alejandro for taking the initiative on such a wonderful, uh, connection, connecting India and Colombia. And I'm going to make a brief presentation. This is actually about the book which which connected Alejandro to me, which is something that I wrote a couple of years back called FinTech Future. So I'm just going to present my screen now. 3, 2, 1. Hopefully it should start now.
Yeah, it's okay.
Perfect. So this is actually the book called FinTech Future. I'm going to take maybe 5 or 10 minutes to go through this briefly, and then also deal with some of the specific issues that we wanted to cover. And then I hope to learn a lot more about the Colombian and Latin American FinTech ecosystem, both through this event as well as subsequently. So I kind of think that this is like a virtual book release in Latin America. That's why I named it so here. The book was called FinTech Future, Digital DNA of Finance. So it covered a few things. First of all, what is money? And money is something which has been like a magic, right? And compared to other animals, human beings are the only ones who have money. And like language, it's quite unique to us. It helps us exchange between India and Colombia and apples and oranges in some sense, establishes trust between strangers. Now, this money was actually analog till one point, right? It was like the notes that we have in our wallet, but it has become digital and now becoming virtual, right? We have virtual assets now, pretty much. What really accelerated this was something which was called Bretton Woods, and I don't think we need to really go into that. But there has been this big change from paper money to what is called as fiat money. And that happened over the last 50, 70 years. And now we have so much global liquidity, right? The amount of money in the world is probably multiplied over the last just 2 years of pandemic. But if you look at before that, from 2008 to 2022 now, 14 years, we would have probably seen tripling or quadrupling of money supply in the world. Still, there is not enough for most people, right? It's very unequal. So that's why I call it money is magic, which has gone mad. Along the way, technology has entered finance, and that's basically the semiconductor technology, the Moore's law, the communication. Now we have 5G, 3G, 4G, and now 5G and 6G. Now, all of this has really come into our commonplace consumer applications in a big way, like this Zoom that we are talking on. So today, the technology is all around us. FinTech is also all around us. And it's a wider process where technology kind of gets into every aspect of human life and every aspect becomes digital. Very quickly, there have been in finance has been obviously dominated by banks. Banks have a certain DNA which is conservative versus the technology players, which have a different DNA, which is far more aggressive and experimental. So it's something that we'll see over the next 10 years, which one sort of makes the most of the oncoming digital world opportunities. Obviously, the telecom becomes the underlying infrastructure, and computing, starts becoming more and more important as we get into the world of big data. So tech DNA helps in some of those things, but obviously regulators would want to keep things progress in an orderly manner. So ultimately, the regulators and customers, right, the consumers will ultimately decide which will be successful. The big tech companies are obviously resourceful. The fintechs are also coming up in a big way, but banks and banks are kind of collaborating with them, which looks like a good win-win for both of them. This is a little bit about India. I'm not going to go too deep into that right now, but I'm happy to take that up in the Q&A or in the discussion. But essentially, India has kind of come out with a very different model compared to the, in some sense, the American model, or increasingly now what is seen as a Chinese model. And this model is really about tech-enabled, capitalist socialism, if I can call that, which is to create the base technology stacks which are available for every citizen, every startup, every large or small company. And some of those are now global in terms of UPI, which is the Unified Payment Interface, which is the largest payment sort of system, real-time interoperable payment system in the world, coming from India. Where do we go from here into future? Obviously, big tech has invaded everything that we see, and they are now into finance. So the FANG that we know and so on is one side of story. The technologies themselves are changing very fast. We have AI and blockchain and variety of other future technologies like quantum coming into picture. But the problem remains pretty much the same, which is that fundamentally the access to credit and access to money for a lot of small players, whether small, whether individuals or small companies, remains still pretty much an issue. And this is something which is in India, Asia, I guess in Colombia or Latin America. A little bit about the aspects of COVID, how COVID has really fast-tracked the whole, evolution of technology, given that, we are forced to do many more things virtually than before, and that basically just makes, all alternatives to physical, which were earlier considered either risky or considered not personal enough, and so on and so forth, they become pretty much commonplace, just like the call that we are having right now. And in some sense, I think it brings the world closer as well. A bit about how we still have the issues despite trillions of dollars that have been printed over the last few years, and I think we still need better solutions. We need better technology solutions to fund businesses, small businesses, as well as individual consumers, those who don't have access to financial products. Bit about how that fintech, not just fintech, but other areas that will get driven by technology, including biology, including education, including healthcare, and so on and so forth. So, it's going to kind of be part of our digital life in every way that we can think of. So I'm going to stop the presentation now and maybe just talk maybe another few minutes on some of the key themes that we can elaborate upon further, if that's okay.
Thank you. Yeah. Thank you, Sanjay. Thank you very much. And now Colombia has involved in the rates of unbanked people. However, the challenge for entities like Movii arise for the skepticism and isolation of some population. How India solve those issues?
Yeah, no, absolutely. So I think there were a bunch of things that I think we could talk about. Obviously, the big issues are, how do small businesses get access to fundamentally they get formalized from the earlier informal ways of doing business. So cash and cash-driven economy has been kind of prevalent in many parts of the world. India did something called demonetization 2016, which took out a large part of cash and high denomination notes, and sort of tried to reprogram the economy in some sense. And something like this takes a long time to know whether it is successful or not. But clearly, I think one thing that can be said is that one of the reasons that India has been able to manage the COVID crisis better, and lack of being able to meet people and still being able to complete transactions better, is because India got onto the digital track far faster thanks to the demonetization. But that was not the only thing. I think fundamentally, the formalization of economy happened also because of a digital tax that India brought about, and that is called GST, or Goods and Services Tax. So that brought a combination of the goods taxes and services taxes, which were earlier different, and onto a single technology platform. And that ensured that close to 60-70 million businesses have potentially access to a formalized system where they have to start filing their invoices, get eventually credit, and so on and so forth. And that's probably one of the largest numbers globally. On the individual side, there is identity stack that got developed over last 10 to 15 years. So every Indian has access to what is called as UID, or Universal Individual the Identity Program, which is a biometric fingerprint plus retina plus facial scan. Obviously, this is something that is done in a very, very secure fashion, and in the least, possibly privacy invading fashion, to make sure that it is good for the, it can be used for all the right reasons and not for the wrong reasons. As we know, privacy is now a big issue with technology, and cryptocurrencies and others have come into being because of some of those issues, especially in the developed world, I think. So there was this whole identity stack, the payment stack that I talked about, which is universal payment interface, which essentially connects all banks, brings them onto one platform, banks as well as payment service operators. So I could have a mobile wallet which will work 24/7, real-time payment across anybody else in the country. We also are now working on something called a data sharing framework, which allows privacy enhanced sharing of data, which is another big issue for any formalization. If that data that gets formalized and gets into a central pool, nobody should be able to misuse that. So we're working on some of those platforms. So I would say it's a mix of technology and using it rightly over last I would say a decade or so across many different platforms, from individual identity, business identity, data sharing, taxation, that have really managed to make a difference. And I think this entire playbook is available for anybody and everybody to sort of look at and replicate as well.
Thank you, Sanjay. Now we are going to ask a few questions for our panelists about how we can offer more financial services to the population. And the first one, Hernando, please tell us about Movii. And the question is, what's Movii is planning to improve those conditions and access to financial products?
Thanks, Eric, and thanks, Sanjay. It's great to see what you're building in India. I mean, it's amazing what you have been capable to do, because normally in this part of the world, we were used to hear that we should go into the study in the States and see how things should be working, or even Europe, and then come back here to Colombia and see how we should be implementing what we understood and learned in the US or in Europe. But definitely, regarding to financial services, those places are not the places we should be looking for. We should be looking for similar conditions to the one that we have right now, no? So India, it's pretty much a very similar ecosystem that one that we had in Latin America and most of emerging markets. Most of the world is in the same thing, which is most of the people are still using money. In our case, 90% of transactions still made in cash, and that's a reality. In the case of merchants, only 8% of formal merchants, even without including the informal merchant, which is the vast majority, but only 8% of the formal merchants receive digital payments. The rest is in cash. So understanding and learning from India, in my opinion, it's much better rather than to go to the States, which have different conditions. So hearing what you were presenting and understanding the reality of India and how government and Indian entrepreneurs has been using technology to formalize and to increase financial inclusion, it's very inspiring for us. So what I want to have like a takeaway about your slides is how the government pushed really fast, the change in regulation and create infrastructure by using technology. You had a lot of people without ID, you had a lot of people without a bank account, and you needed to change that. And doing things such as the demonetization, even though you had a couple of things that were not running well, that hurt in the economy, but that create a leapfrog towards digital payments. Then how you created UPI, by far the biggest online platform payments that really changed the way that little merchants, small merchants decided to accept digital payments instead of cash. And actually, we're seeing it right now in this part of the world. This is starting to happen in Brazil. Brazil is creating the UPI, which name is Pix. And they created almost a year ago, and the acceptance and penetration of small merchants receiving digital payments is amazing. Everyone is receiving digital payments right now, because what is happening here in Colombia is that if you are a merchant and you want to receive digital payments, you will have to ask for a POS. The cost of the POS is high, and then you have the MDR, which is the merchant discount rate, and for every transaction they will be taking out 3% or something like that. So people privilege the use of cash instead of digital payments. So that's a nightmare, that you cannot compare that. So the beauty of India is that in a very fast way, with the infrastructure provided by the government, without any conflict of interest, like what is happening, for example, here in Colombia, we have a local online payment platform in Colombia, which was created like 3 or 4 years ago, which name is Transfiya, but unfortunately is run by the ACH, and the ACH it's an organization that is controlled by banks. So they have a big conflict of interest in promoting it up because they don't want to change. So when this conflict of interest is taken out of the equation, like what happened in India or Brazil, which is the central bank creating that infrastructure, there's no conflict of interest. So the ecosystem increased, people accept payments. So definitely here in Colombia, we need to follow those steps. We need to push our regulator. We need to push the central bank to create their own infrastructure, because it's on the benefit of merchants and people. We need to make that change. And we need to follow the things that you have been creating there. In our case, in Movii, it's a challenger bank. When we open accounts for consumers and we open accounts for merchants, and we allow both of them to pay or be paid in a digital way. So you can pay with a card, or you can pay with a P2P transaction. If you're a consumer, and if you're a merchant, you can receive payments as well with a card or with a POS, or you can receive payments as well with a P2P. But definitely, what I'm more excited about your presentation, and what I'm more excited about the leapfrog that India made in the last years, is how you change an ecosystem so fast. You were having a big problem, millions of people, millions of merchants without having the capacity to pay or be paid in a digital way. And because of this very clever way of the Indian government to create regulation and to use technology to deploy that infrastructure, it it changed the ecosystem completely. And now all those millions of people and all those millions of merchants are receiving payments. So it's really cool. That's what I would like to highlight about the experience that Sanjay created to us.
Sanjay, now, in other hand, the access to credit and to be offered a loan from financial institutions are still not rendered to a few people in countries like Colombia. How India solved the problem?
Yeah. So I think, first of all, thanks, Hernando. I really appreciate your putting out the problems that are pretty much common in some sense in most emerging markets, as you rightly mentioned. And it's really essentially about making making your business transactions more digital. And why digital? Because once it goes digital, then there is a trail, right? There is a track record that can be built. Now, a merchant which earlier was only getting cash was, it's hard for that merchant to use, that cash to understand how to convince a financial institution to give a loan to increase, let's say, the size of the shop from, let's say, 100 square feet to 300 square feet or whatever, right? Because there is all the cash cannot be shown to be part of the accounts, and essentially, then there is no digital track record being created, and that's the base level of formalization. Once that base level is achieved, then you can have more advanced data modeling, and then artificial intelligence, and then many other techniques which come on top of that base data to be able to start, looking at providing more and more intelligent financial services. So I think how that happened in India is, I think, a very interesting story. I think it is not just government, it is not just the private citizens, it is not just the experts, it is not just the technologists, but it is actually a mix of all of them, which sort of came together to sort of put these various building blocks or the pillars in place. So the first pillar, in some sense, was the identity piece that got started around actually 2008, around global financial crisis or just after that, and that gave a unique digital identity to practically every Indian, 1.2 billion of them, really very, very large number, right? Within a few years after the program was started, I think somewhere around 2010 or 11, thereabouts. Then came the next part, which is a lot of these changes are actually not, necessarily very systematically planned. I think a lot of those are also in anticipation and in sort of response to the market realities as they come. So along that stage, there was the entire mobile revolution that happened, right? And I'm sure that's the same is the case in Colombia and Latin America as well, that mobile is becoming a common, entry point for everybody in some sense, right? So essentially, mobile becomes the base layer or something that everyone has, right? And or most people have. I mean, so the cheap mobile phones that came about from earlier smartphones, and now even cheaper smartphones that have come about, made sure that there is a mobile and then there is an identity. And then there was something that came about around 2014-15, which was called a basic no-frills bank account, which was called JAM, which JAM stood for the trinity of the no-frills account, the identity which is connected or which is the base for the account, a bank account, and then the mobile, which became the vehicle for making transactions happen. So this JAM Trinity came about around 2015, thereabouts, and then came the GST, which is the digital tax regime, which formalized or started the process of formalizing, like I said, 60-70 million odd businesses, most of which 99% are maybe really small businesses, really. and not all of them are formalized still. I mean, probably only 10 million are formalized, but as time goes by, every year more get formalized, and thanks to the aggregator, the technology platforms.
Sanjay, can I ask a question there? Did the government give them any incentive to pay taxes in any way?
Well, actually, no, there was no incentive to pay taxes in some way, but the system that was created, and all these systems, whether it's the identity system, whether it's the tax system, and going forward, the data sharing architecture, have all been very cleverly designed to make sure that the system is both very easy to use. So there is that whole, equivalent of intuitive front end or intuitive use case that, Facebooks or the Googles of the world sort of pride upon, right? In some sense, it becomes so easy to get on those because the cost of or the resistance to getting on is very easy. And there was a very low cost of operations, and that was achieved by a lot of open source software implementations, creating APIs, which were, so GST is probably one of the largest digital tax regime, and open APIs, which makes the entire process of filing taxes simple and cost effective.
One of the biggest challenges here in Colombia is we have a money transfer tax, which incentivizes the use of cash. And I don't know if India had anything similar that they had to take out. And do you think that the 2016 cancellation of banknotes was what actually got everybody online? Would you think that was the hardest part, but probably what got India into the digital age in banking?
Well, I think it was certainly a very big decision, and one that was politically very, very difficult and challenging, and was criticized upon. And in some sense, we will probably not know, obviously a lot of people had to stand in queues all over the country. It's a very large country. It's almost like half small continent in some sense. So people without knowledge of what's happening suddenly being yanked out of their houses to go and replace their cash, old notes to new notes. It was not easy at all. But I suspect that did play a role, like you said, in terms of creating a digital leapfrog, because along with that also came the entire adoption of the QR codes and the other easy means for, like Hernando mentioned, the merchants being able to take accept payments in digital form very easily just by using the phone camera to scan a QR code. And the other thing that helped is also cheaper or almost zero cost modes of payment. So because all these new frameworks, and there was a framework which was created called Immediate Payment System, or IMPS, which allowed a mobile to mobile transfer. Most of these new frameworks were not using the old credit card rails, right? So when you talked about MDR, one of the issues is that that's the only frameworks. If those are the only railroads for money movement that one has, then that framework has a cost, right? And those kind of costs are not going to be suddenly reduced to half or zero, because the market dynamics will not allow that. So creating that base layer, which is in some sense open source, which is available for everybody, which is as low cost as it can, was actually something that came about with a combination of the will and the motivation from the government side, but far more also the public or the more sort of interested people who had technology knowledge. And India has been kind of also a leader on the technology side, on software, Sanjay, and so on. Yeah.
Sanjay, sorry for interview. I want to ask Hernando and you as well about something that Hernando has just said. Hernando stands that one of the main issues about the Colombia improvement in payments and the people be able to be paid is the cost. And because those rails are privately owned, yes? So taking into account that Hernando said that if those rails could be make available in a public or in a less expensive way, yes? First of all, I want to ask Hernando. Hernando, do you think that an commonly private initiative that integrates and involves most of the recently set fintech institutions and fintech organizations in Colombia could maybe deal with this issue and tackle them in order to avoid this private system that has been really expensive? And after that, I want to ask Sanjay, if in India, the private banks, once the government tries to introduce the public system that introduce the fast rails to payments, if the banks try to resist and try to maybe not support that public system in order to keep their own business there. Yes.
I mean, thanks, Alejandro. I think that the world has decided many years ago what will be the rails that we will be using to make payments. No, so actually, if you take a look how the world is paying today, the complete world, mostly, it's using the railways that we built 50 years ago in the 70s, which is ACH or cards, no? And yes, they helped us a lot, but they demonstrate that they were not the most efficient and definitely with a big cost. And that big cost excludes the vast majority of the people to use them. And that's why most of the people are not using it around the world. No, that's why 90% of transactions still did it in cash. That's why a lot of merchants don't receive digital payments. Now technology appeared, and we deserve as a world to change that technology that it's moving the payments. And the government around the world are trying to help to define what are going to be the new railways. So there's a very interesting fight between governments defining what is going to be the new railways, the incumbents saying we want to keep working on the same railways, and then other decentralized ways to send money. No, so India, in my opinion, it's the best place to look how the government is using technology to create a new infrastructure to promote payments. And that's what Sanjay explained they created UPI, no? And UPI changed everything. Or Brazil, they created PIX and they create everything. But both of them have a common denominator. That was infrastructure being built by the central bank. Different from Colombia, in which our UPI, which is Transfiya, was built by ACH, which is governed by the banks. Okay, so that's a big conflict of interest. And then the government in India created as well the UID, which is the digital identity. Also, we have La Cédula Digital, no? Or even we have a good ID system. Also in India, they created the process to digitalize and to increase the formalization of small merchants. Here in Colombia, we created a decree, which was the monotributo, to formalize small merchants. And nowadays, you also create the regulation about open data or open finance, open banking or open finance. And we are in the process we have a decree that we're working on to decree that. So the question that we have to make is why, if we have been creating the rules and the regulation and the decree in the same way that India has been doing, why there's such a big difference in the results of those changes? Why UPI explode, why Transfiya hasn't exploded? And we have to think about that. And in my opinion, the reason is because here the government it's willing to make a change, but it's not willing to create the infrastructure. And we need to change that. That's a big change. Second, most of those decrees in change of regulation in India has been mandatory, like the demonetization, like the UPI. It was not an option. Like open banking, it was not an option. But here we are always creating decrees and laws, and it's optional. And we need to change that. And it's going to be interesting whether we're going to be using the old railways, ACH and the cards, the new infrastructure provided by the government, or a decentralized way of making payments, which is what crypto it's pushing towards. I don't know what is going to be the winner of this play. I know that we need a change. We need a change because we need to make sure that any individual or any merchant can have a capacity to pay or be paid. And we need that. Hopefully we'll find a way how to do it. And again, following the steps of companies such as India, of countries such as India, it's the clever way to reach that because they did it. In my opinion, 8 years ago or 10 years ago, they had biggest issues than the one that we have. Sanjay was saying it's half a continent. It's like more than 1 billion people. Imagine that. And they change it by building infrastructure, government building infrastructure with the correct technology and pushing on a mandatory way. And that create a big change. That's an opportunity to see. We have to make a decision.
Thank you, Hernando. Sanjay, any comments?
Yeah, no, I think you're absolutely right, Hernando. And, I just want to clarify or correct the demonetization was mandatory, but other things have been voluntary. Everything else, UPI has been voluntary. Coming on to the GST platform has been, I would say, partly mandatory. But the data aggregator or the open banking that we are now looking at, where one bank's data can be available for another bank or a non-bank which is into the business of financial services or insurance or others, is again not mandatory. So the whole thing is all about how do you make as you rightly said, the basic infrastructure has to be publicly owned. It cannot be in private hands. I think that's one lesson that one can think of, is that, as you rightly said, incumbent owning infrastructure is not going to lead to innovation because there is just not enough need to try to risk that existing sort of pie that is in their hands, right? I mean, it just doesn't make sense from a business sense. And there have been enough theories of innovation, including very famous theory of disruption by Clayton Christensen of Harvard, which talked about the fact that the changes always come from outside. It's not the incumbents who make those changes. The only thing is that the governments, while they have the intention, I think they also need smart technologies to help them to make sure that instead of old incumbents, you don't create new incumbents, right? In some sense, you have to make sure that the base layer is available for everybody, and you can create innovation on top, but the base layer is free. It's like a road. Everybody can use the road in some sense, rather than it being a very priced, very high cost toll road or a railroad or an ACH or whatever one might call, right? So in some sense, we have to make sure that we create using as much as open source softwares and obviously very secure, very high quality softwares, APIs for most of the things that we currently do not use them, to be able to do things programmatically, to be able to do things digitally, and then make it very, very, very easy for people to start adopting them rather than having to start pushing them, because pushing never helps beyond a point. It can probably just start some movement, but ultimately people have to adopt it. And in India, I think the biggest success has been that the pie has been made bigger rather than the same small pie that everybody is fighting on. The old banks and Alejandro, you talked about the private banks and public banks and so on. Obviously, they are going to have some hesitation in sort of open sourcing their data, open sourcing their networks and so on. But if you can convince them that there is a far bigger business out there by becoming more open, then everybody starts seeing the bigger picture, right? Rather than how do I protect my small turf, everybody starts seeing how do I take advantage of a 100x opportunity. And even if I get 10%, 20% lesser than what I have today, it's probably 10x of what I have today. So, how do you make that change in mindset happen? I think that's something that's got to be played over a period of time. Thankfully, luckily, with a lot of efforts, it has started playing out in India, but there's no reason why it can't in any other part of the world, including Colombia.
Sanjay, can I ask you something?
Yeah,
sure.
Is because here in Colombia, the inclusion product that is being moved the most now is credit cards, a little bit debit cards, but now everybody's doing credit cards. What is the product that India is seeing in the inclusion phase, or at this stage? Because here, it's like like Hernando said, it's credit cards which are based on.
We lost you, Juan Esteban. Juan Esteban, the last part of your question, please repeat, if it's possible. Juan, we lost you in the last part of your question. Please repeat the last part.
I think his line is not too good, but I understood the question about credit card and debit card being the principal mode of financial inclusion. So I think the primary mode of financial inclusion ultimately in future is not really going to be credit cards or debit cards, right? I think what does every person have today is actually a mobile in some sense, right? And in some sense, a mobile is effectively a bank branch, is effectively a credit card, is effectively a mode of wallet, whether it's for formal financial services, banks or payment services, or whether it's a Airbnb account, whether it's a whether it's a media account, Google account, Facebook account, or whatever, or it could be a cryptocurrency wallet, right? So in some sense, the credit cards and the ACHs are, in a way, as Hernando rightly mentioned, things of the past. They were required at a time when you did not have any means for strangers, and that was my first slide actually in the presentation. Money gives a way for strangers to connect to each other. Now, in earlier times, there was no way for them to know each other except by showing something, and that showing something was a card, and the card was backed by certain amount of a certain amount of pre-checks and so on and so forth that was done. Now you have many other ways to create that pre-checks. There could be identity-driven things. There could be mobile-driven things. All you need is multiple sort of factors, right? 2-factor or 3 factors of identity, authorization, registration, etc. And there are many more available now. Of course, credit cards, debit cards continue to remain active because they are very large networks, and the networks kind of create value by themselves, the network value. But whatever is excluded from that network can be brought in by other things, and that are far more easier, far more lower cost, far more cheaper, open source, and as secure as credit card or debit card kind of frameworks. So yeah, I don't think one really needs to restrict to the card or the existing interbank networks. One has to really open it out, bring more, in some sense, fintechs, more startups. Obviously, they need to be very careful because dealing with money is one of the most, one of the most important things, and one has to make sure that it is well regulated, it is secure, it is, but at the same time, it has to be fast, right? It has to be fast. It has to be low cost. The cost of finance cannot be more than the cost of business, right? Cost of receiving payment cannot be more than the margin in a business for a small business owner. He can never increase that business beyond a point. So yeah, I think those are some of the things that may be useful to think about.
Thank you, Sanjay. Now, Juan Esteban, which problems do you think Juancho Te Presta had to solve in order to improve the access to credit? And please tell us about Juancho Te Presta.
Sure, I'll tell Sanjay. Juancho Te Presta is a microfinance, fully digital. We focus specifically on women. We don't think there's gender equality in lending, and so women pay better, so we give them better terms. The biggest challenge, I guess, in Colombia is access to alternative data and open banking data. And I'll throw back the question to India. what are you guys doing in open banking and forcing banks to share information? Because in Colombia, we adopted privacy laws from Europe, so that has restricted a lot of the development in open data here because of very stringent data protection laws. And in a way that has hindered a little bit the development of open banking, at least till now. As Erick said, or I think it was Hernando, we need to push for open banking mandatory from banks and fintechs. But I would love to hear your experience in India about how you're doing or going about open banking.
Yeah, so there is actually a data sharing framework which is still in sort of first level of its production in India. It's called an account aggregator framework. An account aggregator is driven by the it's actually housed as part of the central bank, so it becomes in some ways far more I wouldn't say mandatory, but almost close to what a regulator wants banks to do. So that effectively puts data into in some sense a shareable, interoperable form, such that with consent of individual. So if let's say I have an account with Bank A and I want to provide the proof of that to, let's say, a fintech B or a insurance company C, then on my consent, without that, no data can be shared. So on my consent, the data can be pulled, and that's what this account aggregator ecosystem does. And it's still in its infancy, but as all technological changes go, it really is very, very high J-curve kind of growth, and eventually it will become commonplace in India as well. There is also a privacy act that is in shape for last several years. India is also very noisy democracy. The Aadhaar, or the universal identity, which was earlier available for being used on and innovated on top, was stopped by the Supreme Court at one time. So there are a lot of these constant tensions between the appropriate level of openness and privacy. But I think the real thing is achieving both, right? I think there is this whole wrong notion that has come about that open means non-secure or non-transparent, or it's something which will invade privacy. I think this particular framework, it's actually called data empowerment and protection architecture, sort of changes that, because you have to be able to empower. You have to be able to share your data on your own accord, and not because my bank, if it has my data, it's just a custodian of my data, really, right? In some sense, it's really as simple as that. And we are kind of changing that whole mindset. It came about by the entire social media and others, where an account with a social media becomes all the content effectively becomes property of the network, so to speak, which is really not correct. Ultimately, it's the customer who owns the data. So as long as we make sure that, I think we will find ways to deal with some of these issues, including the European GDPR and other issues. So in fact, as we speak, some of our friends are also talking to the relevant, so we have a Data 6 initiative, which includes India and a few other countries, which is coming up with potentially newer alternatives, which are far more privacy enhancing, yet open for data sharing. And this is not just for finance. This is for other areas. This is for healthcare. This is for eventually education. This is for every other area, because data is going to be the common theme, right? And as countries, as eventually as societies, we have to find ways to be able to share data far more confidently, far more securely, or far more in a privacy enhancing way. So we've been able to do that. I think banks are also willing to, like I said, come onto the bandwagon, because they see there being, so right now about 1 million businesses get access to credit in India, formalized credit. And like I said, there is 60 to 70 million businesses out there, right? So the overall size of the market is so large that if if slowly each of those starts getting formalized, they start exporting, they start doing more activities, that starts building the scores, the credit scores, they can grow faster, and there is more activity, there is more opportunity for banks, for fintechs, and everybody. So seeing that big picture, I think, and with a little bit of gentle nudge from the regulators, as well as making sure that the technologies are really, really in effect, cost effective and easy to use. I think combination of these three factors has ensured that there has not been major reservations, I would say.
Thank you, Sanjay. We are going last question. Open banking and open data is needed to improve the financial product numbers and obtain better conditions. How India deal with the issues with the sharing data between financial institutions?
Yeah, so basically, essentially a common set of digital tools were made available, or APIs as they're called. So there is a standardized language for financial institutions to talk to each other. What happens is different systems. Most of the issues that we face today are because systems don't talk to each other, right? It's not interoperable. An ACH system will not talk to maybe another system, or let's say if I am a large company, I have a SAP system, and somebody else has maybe an Oracle or some other small QuickBooks or whatever. They may not necessarily interoperate very well. There'll have to be connectors built and so on. So that inhibits sharing of data easily, or ability to transport the data easily, because there are no common languages available. It's almost like if I start speaking in Hindi and you start speaking in Spanish, we won't be able to have a conversation. We need English in some sense here to give that common medium of communication. And all financial data is nothing different from language, right? It's really a set of ledgers. It's really an entry into an account. So all you need is to make sure that there is standardized language for banks and other information custodians have to be able to share with each other. So one piece is just creating that digital infrastructure to provide that plugs so that I can export my data, subject to, as I said, the most important thing being consent of the user, consent of the account owner. I think subject to these two basic things, and obviously then there are other sets of technology related. There has to be a very high level of security ensured, because financial data is far more in some sense strategic important compared to, let's say, maybe some other data about which
Sanjay,
may not be that important.
One question there is that definition or rules being defined by the government, by the banks, or by the industry in some type of association, or who's defining that way of exchanging information?
Yeah. So as I said, it's actually a confluence of the government saying we should do this, the private sector, some of the think tanks which are really interested in ensuring that technology is meaningfully used for furthering societal goals. So there are certain such think tanks also which provide pro bono services to the government, to the private sector, to ensure that there is a layer that is created, which is a base layer, whether it was the Aadhaar that had support from these, whether it is GST or the tax regime, whether it is UPI and so on and so forth. So it's a combination of the government, the willingness of the incumbents to experiment a bit, and technologists who want to provide their skills, time, and efforts to kind of create those public, if I can call public digital goods, which can be used by the banks to share data, which can be used for the account aggregators to get the consent from the users, and so on and so forth. So yeah, it's not a single party. And I think most challenges that we have now in most respects really require the different pieces to really come together. And the old frameworks of one entity which managed everything are kind of over. There has to be more collaboration, or else then we go to the other end, which is more completely decentralized, and then, that's a different world altogether. I'm not too sure whether that's as cost effective and as, fast, talking about just money transfers and so on, unless one is part of one framework. And then it's really an ACH versus some other decentralized framework. I think that's not necessarily, one doesn't have to choose between them. One can choose to create something which is both free as well as a fast and low cost.
Thank you, I have one last thing that I will like to go through, if there's a couple of minutes more, which is the world needs a native digital currency of transactions in internet, no? And especially now that we're entering into Web3, no? Web 1 was touching the internet and reading newspapers. Web 2 was interacting with social networks, and Web 3, it's getting into the internet. And I don't see myself paying with an ACH or a card in the internet. And that's the reason why cryptocurrency were created, not especially Bitcoin, to be the native digital currency for transactions in internet. But at the same time, Bitcoin is growing. There is a big geopolitical debate between the US, which has the dollar, which is the currency that most of the world use, but also at the same time, China saying that it's about to launch the yuan, and also India saying that you're about to launch the e-rupee. So all the big governments are trying to digitalize or tokenize their currency. How do you see this in the future? Is this going to be a decentralized money like Bitcoin? It's going to be big economies tokenizing their currencies to make it easier and to move easier.
Yeah. So I think money is just money has three basic roles, right? The store of value, a medium of account, and a way to transact or make exchange happen between dissimilar things. It's like the common layer. We are obviously entering an era where every aspect of our life is becoming digital, and hence the old ways of making money transactions are going to be more and more difficult to happen, right? I mean, just think about a simple thing that you would want to do a transaction, let's say at 10 p.m. or 6 a.m., but the bank may be open only from 10 a.m. to 6 p.m., for example, right? There are many other issues with the historical ways of dealing with money, and in some sense, in response to that, and the threat from cryptocurrencies offering a different model to the entire, in some sense, I would say, techno-economic model, in some sense, to connect people with each other, connect businesses with each other. I think in the context of that, this whole concept of digital currencies has come in. I suspect every country that can actually manage to create its own digital currency will want to create that, because by that, they will ensure that they have control over their economy, or they have ability to influence their economy, right? For example, if the whole world had a single digital currency, for example, a Bitcoin, then let's say a crisis in a single country, which required, let's say, a monetary or a fiscal policy change in a single country, would not be possible in such a framework, right? Because it's a global framework in some sense. Right now, we have nations, and we have national currencies, and they work because the nations are effectively working on behalf of their citizens in some sense, and everyone's problems are to some extent different, not necessarily the same. As the world becomes digital, we all start becoming far more alike each other, right? We all start consuming the same content, but we still have different languages. We still have some uniquenesses, but there are a lot of commonalities as well. So effectively, we'll probably start seeing situations where we'll have our digital currencies, just like we have current analog currencies. And those digital currencies will talk to each other, will have interoperability in future. I mean, just maybe fast forward 5 years, 10 years down the line, that's probably what will happen. Because if that does not happen, then the alternative would be, as you rightly said, the cryptocurrencies or the native currencies, so-called, of internet, which will then become far more prevalent. Of course, the regulators may or may not like that, because that takes away and even governments may or may not like that, because that takes away their ability to, create more customized models for development for a given nation, and so on and so forth. So for India, there has been a announcement just about 2 weeks back in the national budget, annual budget, that digital rupee, as you rightly said, would be launched in the next 12 months or thereabouts. We'll have to see how that is architected and designed to, but most likely it will be interoperable. It will be like the physical cash equivalent in the digital domain. And if other countries develop their own digital currencies, Colombia or any other country, then we'll have to make sure that these digital currencies talk to each other very, very effortlessly, so that the ease of use of digital artifacts extends to things which are far beyond our imagination today, right? And we are talking about a world where we'll have drones, we'll have sensors. Our body would have maybe 5 sensors. Wearable watch has maybe 100 sensors, and so on and so forth. So all of these need to be able to talk to each other easily, and that's why you need native currencies. You need digital equivalent of physical currencies, which are as easy to operate as operating our social media account, or as operating our let's say any other digital aspect of life. So we have to take the complexity of technology and finance out of the currency, and that's essentially what will happen, I think, because it's all ledgers. It's ultimately all different ledgers which need to be able to talk to each other.
Thank you very much, and thank you, Sanjay, for your explanation. Thank you, Hernando. Thank you, Juan Esteban. And now, Alejandro, the last question is how Colombia is dealing with open banking, and what could be foreseen in this field. And please make some conclusions about this panel.
Thank you very much, Eric. I would like to highlight 3 conclusions and then make a little a statement about this field of open banking in Colombia. The first for all is what Hernando, Sanjay, and Juan Esteban highlighting along this conversation, that it can be concluded as the following. The higher get the fees of payments, and so the most common will be other solutions that people is intended to find. I mean, if you try to continue in this monopoly, the financial institutions in Colombia, the people are going to continue to look for other solutions for payments, and in this area, the cryptocurrencies is going to take place. India has recently announced that it's going to take a 30% of charge on the usage of the cryptocurrency, of the earnings. So in this area, we can notice that the government is taking the well steps and has taken a path that suggests that if you make a public system of payments, a public available technology in an open data way to think about it, then you can introduce some regulation in order to impose some barriers or limitations to cryptocurrency. I'm not meaning that cryptocurrency is a bad thing, but there's something about cryptocurrencies that governments are trying to regulate. That's why China has banned it. China has banned the cryptocurrency from one day to the other. Yes. The second conclusion I want to highlight is that the digital currency is something that is going to be implemented in the next years. In the Internet 3.0, the digital currency is a need to share data, to share money, and in this field, people are going to be offered new credits, new opportunities. For example, in Colombia, people could be offered a credit from a bank from India. Yep. But in Colombia, we are far from that place. For example, in Colombia, we have still a private credit scoring bureau. This private credit scoring bureau limits the access to the credit for people. So in Colombia, and introducing the topic about open data. We are currently still discussing our first regulation about open data. Although we have a really strong regulation in data protection that has incorporated the GDPR regulation from Europe, we still are dealing with our first regulation with open banking, and it could be foreseen that in the future issues like offering a credit before you get into a bank, as it happens currently in India or in China, there's something that it is not going to be available in Colombia soon. So open data and sharing data between the financial market participants, it's something that it's not going to happen in Colombia, in my opinion, in the next 10 years. The banks and the traditional institutions are not willing to share with the others how the data is driven, even if they manage and they share that data between the same financial group. Yes. And to conclude, I would like to highlight that the conclusions that Sanjay offered to us on the field of changes about the government, how the government has implemented the new rules, I think that is not in that mandatory way. Privates has taken a part on, yes, and in doing so, and taking into account what Juan Esteban said, privates could take a part in this new regulation about open data and in demanding a private and a public, or I mean, privately managed, but in a public way, as everyone could enter into a system of payments and of data. Yes, that would be my conclusions.
Thank you, Alejandro, and thank you, everyone. Now, thank you to everyone who attended this webinar, and see you soon. Thank you very much, Sanjay, Records.
Hey guys, bye.
Thank you.
Thank you.
Cheers.
Thank you very much. Really appreciate all the friends in Colombia. Thanks.
Thank
Bye-bye.
you very much. See you.
Bye-bye. Thank you.